Hello everyone and welcome back to Southern Wealth. I hope you guys are doing very well. If you do enjoy the content, please consider dropping that like and subscribe. As you guys know, it's the only thing that I ask for. Now, let's quick start it with a couple of remarks on two of my favorite idiots, in my view, in the space of financial media. However, they have a big following, so I always like to point this out. So one of them is obviously Peter Schiff. He spent months saying that the bubble was finished and that US stocks were finished, and that was it. Now US stocks are hitting new all-time highs, and here he comes. But priced in euros it's not, but priced adjusted for inflation it's not, all this kind of stuff. Notice, as I've mentioned this before, he does this every single time, except when it comes to the price of gold. Because you see, if you adjust the price of gold for money supply increase and CPI increase, because you have to combine both of them, because the money supply flows into other assets. So every time you own gold, you could have been owning something else. So that's something you have to keep in. So gold needs to at least keep pace with the increase in money supply, plus the rising costs of consumer goods. That's the key. There's only two assets that beat that, and it's tech stocks and crypto. That's it. All the others either trail it very well, like real estate or the S&P, but most things underperform this. So why doesn't he talk about gold adjusted for money supply increase and CPI? Very simple. Because in that case, gold needs to go to $6,000 just to break even, not make money, just break even from 2011. And here's the funny one. Gold needs to go to $40,000. $40,000 to break even from the 1980s top. So, but if he says that, because he knows it, but if he says it, he loses customers. Then nobody buys his funds, nobody buys gold from him, from Schiff Gold, nobody buys anything, so he lies about it. And or hides it. Not necessarily lies, just simply pretends it doesn't exist. Then he's already bringing your classic idea, which is, the dollar is going down, so inflation is going to go through the roof. Weaker dollar, higher costs for imports, inflation explodes. Narrative. That's the story, the prediction. Then why, between 2010 and 2020, many years where the Dixie was 80, not 97, 80, and 85, and so on, and inflation was 1.2, 1.3. There was a year, I think, was like 0.1, and the Dixie was 93. So you see, this is my problem with it. You just have to go back in history a little bit and see and test your narrative. So the narrative is Dixie lower, imports costs go up, inflation skyrockets. This is the narrative. Okay, let me go see what happened to inflation during the period of the dollar being lower. The CPI, the inflation was low. That seems to contradict my theory. Maybe a lot of things move that I don't understand. That should be the conclusion. Obviously, that doesn't happen. The other one is your favorite here in the chat, here in the comment section, how I see it, which is crypto banter. So as I've mentioned, the day that crypto banter said ETH is a dead chain, there's no point in holding it, I see no reason to hold it, I'm gonna sell the remaining of my ETH. Ethereum was $1,740. That was the last day before the pump into $2,800. Then he said to people, I'm buying Ethereum with leverage at $2,750. It then proceeded to go back to $2,150. And now he today in his video said he's adding Ethereum to his portfolio again. Because BlackRock is buying Ethereum and they didn't come, and BlackRock didn't come out with a Solana ETF, but they went all in on Ethereum ETF. So, and because BlackRock has a lot of money, he's gonna now add Ethereum to his portfolio at $2,500 after selling it at $1,750 and after buying it on leverage at $2,800 before it dropped to $2,150. Now here's the question to you. Do you think he discussed the fact that he was telling people that it was dead at 1740? No. Do you think he addressed the fact that he was saying he was buying it on leverage at 2,750 before it collapsed to 2,150? No. Do you think he said, hey, I know that I've said all these things about it, that this was dead, finished, I apologize, I was completely wrong, it's very bad, so I'm now adding Ethereum to my portfolio? No. He just talked about it like there's nothing there. And I told you, it's a matter of time. When did they start talking about crypto stocks? After they pumped 150, 180%. Not before, after the pump. And he said often, and he said it again, altcoin season will not happen. Altcoins are finished and dead. The same way that I was right about what he was going to do about Ethereum, he will do the same about altcoins. In a couple of months, you'll be talking about the top 10 altcoin to have in your portfolio. And somewhere or another, I suspect that some of them he will get some private allocations, that we're going to find out in the bear market that he got some private allocations too. That's my feeling. I cannot prove it. But if it goes anything like last time, we're going to see a lot of dirt. I like the bear markets because it exposes the little things that we all believed to be true, or people paying attention believed to be true, and they were dismissed as conspiracy theories, and then all of a sudden, for example, when certain exchanges were hacked, and you could see the wallets of big influencers pumping FTX and Celsius to you at the same time that they were selling and taking their tokens out of Celsius and FTX. Same time. So getting the sponsorship fee by FTX and Celsius, telling their followers, oh, Celsius is great, FTX is great. At the same time, they were taking all the coins out of FTX and Celsius, and we discovered that during the bear market, when the whole thing went bankrupt, and we could see who was doing what. By the way, I'm not talking about crypto banker here. I have no idea if he was in his wallets or not. But of course, he was a big promoter of the Pump Fund token. Never heard about it again. Terra Luna, never heard about it again. Never. It's like he never said anything. Just disappeared into the oblivion. In any case, you look at bonds and the dollar going down, bonds going up. That's good. That means liquidity is increasing increasingly quite quickly. That means financial conditions are easing. Now, I have to say it again because people just don't understand. Does that mean that we're never going to see a red day again? No. That means that generally, as this continues, the trend is up. And I'm going to tell you a little secret. It doesn't matter if it's a Republican or a Democrat. It's all about liquidity and financial conditions. It's all about the currencies chasing the financial assets. I know it's not sexy. I know that's not, how to say, the most interesting or exciting reasons and correlations on the planet. It is what it is. It means your currency is getting debased and your asset prices go up in accordance to the speed that your currency is losing value. That's all it is. And in that scenario, eventually you can have short-term noises like the tariffs. You can have whatever, and give it enough time, and you're back to new all-time highs. You see, the thing is, I was saying that during the worst period of the correction. Where are all the influencers talking about the 30K Bitcoin? Do you remember those? Where are the 40K Bitcoiners? Disappeared, never heard about them. What about we are about to have a 90% stock market crash, like Harry Dent. Oh, he called the top like 10 weeks ago, and now all of a sudden he's talking, oh yeah, we're probably going to make new all-time highs. So what? Well, you've been saying that this is going to crash 90% every single day. What happened? What happened to the Nasdaq's about to go to 10K? I cannot find them anymore. Where are they? And still, there's a lot of people short this market. And can I be wrong? Sure. Of course I can be wrong. What you need to understand is you're fading global liquidity and pumping, endless pumping of trillions of dollars. That's what you're fading. And not just here. Not just the dollar. Euros, yens, yuan. Pick your poison. Ones go faster than the others. That's about it. Oh, by the way, do you remember when people told you, oh, we need to raise rates to fight inflation? Really? Switzerland just cut rates to 0, and they have the lowest inflation in Europe. Actually, they have deflation at the moment. Who has been saying for the longest time that lower interest rates means lower inflation as long as banks act as liquidity gatekeepers? Yeah, here. What about India? India just cut rates for the 5th time, and inflation is coming down every single month. That's surprising. What about the ECB? Europe, they cut rates 8 times, and Germany inflation comes lower than expected at 2%. Weird, right? Because they're cutting rates, right? Inflation should start to be spiking. Yet it keeps on coming down and down and down. I don't know how much more evidence you need to see until you learn, until these economists learn. One good thing is that I love is that these economists keep on making stupid predictions. And usually doomsday predictions, which is good. I hope it continues, because fading economists is the easiest playbook ever. Now, when it comes to crypto, we will play catch up to the global liquidity cycle. We know what it is. We have these periods where it feels like paint is drying on the wall. It's like watching paint dry, and then all of a sudden you wake up. Okay, Bitcoin 150K, but it was just 100K the other day. What happened? What happened to this? Oh, it's 150K. Now it's going to a million tomorrow. 150K million 2 days max. Yeah, this is how bipolar the crypto communities are. It's everything is terrible, or everything is, it's going to be worth the moon, whatever. We know how it goes, right? It's part of the deal. I do think Ethereum will play big catch up. There's still record shorts on Ethereum. It's absolutely crazy. And we just need the big players to say, okay, we all have enough Ethereum, we're all positioned. Can we go now? Can we start using the chain, tokenize some stuff? Go. Then all of a sudden, all those shorts gonna have a very good and happy day. Pulse chain, as you guys know, I call it my retirement coins. There's not much been happening until Ethereum really pumps aggressively. I do expect Pulse chain to be somewhat less in display. I still believe in it? Yes, I do, very convincingly. I am the only YouTuber that I'm aware that likes Pulse chain and PLS, PLSX, X, Hydron, Icos, etc. I've never made a negative video about the ecosystem. I do understand Ethereum and altcoins need the business cycle to pick up. We need lower interest rates on that front. Not Bitcoin. Bitcoin doesn't need it, but the altcoins really need some more juice to really run. So am I seeing the conditions that I would really appreciate? Not yet. So why would I expect something different? If you tell me that Solana is at $2,000 and Pulse chain is half SEC rate, yes, then I'm going to be concerned. So far, that's not the case, and I do believe that until the business cycle really picks up, it's going to take a little bit of time. What could happen for us to see really massive liquidity conditions improving even more? The announcement of a new Fed chair. Now, as I've told you before, and if you look at bonds and the dollar, that's already been priced in case you haven't paid any attention. That's what the market is doing right now. What that's going to lead is into the following. As time goes by, Powell will be less relevant. His FOMC will be less relevant. Everything will be less relevant as the market, as soon as you have the announcement of the new Fed chair, now you can start pricing the Fed future behavior. That's exactly what's going to happen. And final word on Elon Musk, I see is that is still very aggravated about the big bill. I get it. In the perfect world, I would say he's right. The issue is, if we actually did what he wanted, we crashed the whole market. Now, I'm not just talking about the stock market. I'm talking debt market. I'm talking credit frozen. I'm talking about deposits gone, no bailouts. Talk about Social Security taking 75% haircuts, no bailouts. I'm talking about 10, 15, 16, 17% unemployment and no handouts because there's no money, don't forget. And my experience or my analysis throughout history is when things get to these extremes, you have a lot of unintended consequences. So, for example, the Great Depression of 1929, I've said this before, it's an historical fact. You can check it. Don't never take what I say as a fact. Do your own research. I mean, there was a certain party in Germany that led to the Second World War eventually. It was pretty much done. I mean, it had no popularity in the late 1920s, but they kept saying that a massive crash is coming and that Germany was weak and blah, 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 all of this kind of stuff. Then the Great Depression in the US happens. As it happens, it throws Germany, it contaminates other parts of the globe, and it throws Germany into a profound hyperinflationary crash. I'm talking people burning cash to warm their kids type of thing. And in this thing, that party gained massive popularity and was elected in 1933. Most people forget about it. They were elected. And eventually, we all know what happened then in the Second World War. My point being, something happened in the US, stock market crashed in the US, and if you went there and told people, by the way, the stock market's going to crash here, and within 10 years, you're going to be in the Second World War, because these people are going to win the election here because of this, people would call you crazy. If you went back in time and you said that to people, people would put you in an institution immediately. But yet, that's what happened. So, and what we're talking here is something worse than what happened in the Great Depression. And you could come to a situation, well, let's say we play Elon Musk's textbook out. We play it out. And people say, oh my God, this is the worst crash of all time. Is this the result of capitalism? I want socialism. That's it. I want socialism. I don't want this capitalism. So what is this? And then you say, oh yeah, but the government bailing out is not capitalism, right? That was the problem. Do you think people will understand? They will think like this. This system over here, I was eating. And now I'm not. That's it. And I blame these people who are big defenders of capitalism. So that means that, this is what the socialists were saying, that these crashes happen and then the whole thing goes to the complete crapper. I'm going to pick the socialist stuff. Oh, Elon Musk, you have a lot of money. Give me all your money. By the way, you said some things that we didn't like. You're arrested now. You see, my point is that something like this can easily go into these levels. Why? Because we are too far gone into the system now. We could do that with 40% debt to GDP ratios, 50% debt to GDP ratio. We cannot do it at the levels of debt that are in the system today. Why? You start repaying debt, you take liquidity out of the system, asset prices fall, asset prices are collateral for debts fail, banks fail, you cannot bail them out now. So that means that all the deposits in those banks, people are like, now all that money is gone. People are going to find out, going to have a really good crash course in what an unsecured creditor to a bank really means very, very quickly. This is what is defending. Because this is what's going to happen if you do that. Or you can try to put in place a system that allows you to outgrow the current predicament you're in. If you fail, well, maybe your economy looks more and more every year like Japan. But what you're advocating on the other side, at the current state of events, I agree. This should have been done a decade ago, not now. Now it's too late. But this should have been, not just in the West, by the way, Europe, Australia, very similar things, Canada, etc. So, but now it's too late. And now if you do it, you can have so many unintended consequences. Because if things are the way they are already in the streets of the US, with the current situation as it is, can you imagine a 20% unemployment rate, banks failing, no social security payouts, no unemployment handouts? Can you imagine what that will cause? I mean, it's a complete. And don't forget with plummeting growth, because then people start, why am I working? This is crazy. So you can have a lot of unintended consequences. I get it, and on principle, I get it. But in reality, we know that's not the case. So growth is the only way. Is it going to happen? Is it going to work? Is AI and lower taxes going to drive immense growth? I don't know. Nobody knows. One thing that I know is that the alternative, at the time period about 100 years ago, and it was much less, it was much easier at the time than it is today. It ended up leading or setting in place the pieces of the puzzle for a world conflict that took the life of 60 million people. That I know. So be careful what you wish for. Not even the wisest can see your lens. So as Gandalf in The Lord of the Rings used to say about Bilbo's pity towards Gollum or Smeagol. And that's true. You can have the stock market collapsing in the US leads into, or is a very crucial stepping stone into World War II. And if you went back in time and you told people that that's going to happen, people would laugh in your face, and they would have printed $10 trillion on the spot to save the stock market if they knew what was going to come from that disastrous situation. And with that, guys, sorry a little bit for the longer video. Don't forget, like and subscribe. I really appreciate you being here. And if you did enjoy the content, drop that like. If you don't, insult me in the comment section, say I'm a complete lunatic. That's also fine. Catch you tomorrow.